Okay, so what is assignment 1 focusing on? What's the first few questions covering assignment 1? BIDC. Okay, bracket. This is
okay. So are we going here?
Yep.
Okay.
Assignment 1.
Okay, question 1. Jack owns a business selling computers. The following transactions took place during the first week of September. Required. State the ledger accounts to be debited and credited to record these transactions.
Okay, so that's the required. So required is state the ledger accounts. So ledger accounts would be what? Like bank or sales or inventory, those type of things. So a ledger account is that specific account that is debited or credited. Okay, so here they said state the ledger accounts to be debited and credited to record these transactions. Okay, so we're going to have to look at each one and we're going to have to say debit this, credit that, and obviously with the amount. Okay, so what I would do here is I would draw up the workings. So the workings is basically what they're asking for here. Okay, so Jack owns a business selling computers. That's important because anything that's computer related would be what? Inventory. Okay, so the following transactions took place and that was over a few weeks in September. Okay, so let's look at number 1. So I would say September 1. Right, what are you going to say? Actually, you should be doing this because it's practice.
So how should I lay it out?
You can just write down the transaction. So for example, September 1. And then you can do debit, so DR, CR, and then what it is, and then a column for debit and credit just to show the amounts. It's kind of like a journal.
So like this, so September 1, and then it'll be
2 columns.
DR and DR,
yeah, DR, CR, and then you'll write down what it is,
and then the column.
and the columns. Yeah. So it's basically like journal. Okay, so we've been doing journal workings as the analysis.
Okay, and then let me draw 2 columns here.
No, you can actually draw the columns right down the page. Because obviously every transaction will have...
Okay, so debit. So introduce additional capital into the business account. So we're going to credit capital.
Definitely.
I don't know what you would debit.
Well, what did the owner give?
Capital.
In the form of?
Check. Or
cash. Yeah, so what would cash affect?
Bank.
The bank accounts, exactly.
The bank.
Yes. Okay, so remember, when contributing capital to the business, you're going to either contribute an asset or cash. So in this case, bank is being affected because the $5,000 is being deposited into the bank accounts. Right, so if you're introducing more capital into the bank account, you're obviously going to affect the bank. Right, so you're going to debit. I would even show the rules, so why are you doing that? So next to bank, I would show bracket asset increase. That's the most important bit. Okay, because that's the application of the rules. Okay, that would be your working. Capital is capital. Capital is a credit. Capital is...
Because I don't need to put anything.
You can just say CR next to it if you really want to. Capital is credited or capital is capital.
Okay, I'm not going to
Right, and that's it. And obviously the amounts, how much? 5,000 debits, 5,000 credits. Right, so now we've shown. That's kind of like a general journal. Yeah, it just states the ledger account to be debited and credited to record these transactions.
Okay, so then another one on the first. Purchased goods for resale on credit. So purchased goods, so inventory would increase.
Purchased goods, definitely.
For resale on credits, and then creditors control increase.
Yeah, I would use what they use, so trade payables, that's what they use. Okay, but let's put both, so they can't argue about it. Okay, because we know their marking is a little bit like problematic. So let's give them both. Let's give them trade payables and then slash creditors, so they can decide which is relevant. Okay, they're probably going to go with creditors, but it's good to put both. Trade payables actually.
Okay, so trade payables is increasing.
So yeah, I'll write the date again. So 1st September. Trade payables is increasing, correct. And what is trade payables?
It's a liability.
Very good. Okay, so where would you increase the liability? Nice, there you go, you got it. See, these are basic, so it's good to do these exercises because it's revision as well. Because it's been a while since we did chapter 1 to 8. Okay, so next to credit, you're going to say trade payables, and then I'm going to say slash creditors, just so you've got both words there.
I'm going to have to go on another line.
Okay, well, put a slash, and then just write it underneath, it's fine. Okay. All right, brackets, liability, L, increase, close. All right, then write down the debit. What are you debiting?
Inventory.
Good. Okay, so inventory, liability increase for this one. Debit, inventory.
Asset increase, right?
Definitely. Yeah, A increase, asset increase. Perfect. And then you would show the amounts. What was it for this one?
3,450.
3,450. Great. Okay, 3,450. 3,450. And that's for September. Okay. Right, so again, you analyze, you tell me what's happening in number 3. And then we'll check. So 3rd September, so September 3.
Sold goods for cash. Okay, so it's easy, so it's sales and inventory.
No.
Sold goods. Cash.
Yes, okay. So it's, remember, with the sale, you've got 2 transactions. Bank and sales. And then you've also got cost of sales and inventory. But we're not looking at the perpetual system because it didn't tell us anything about the system. They just told us to give the account that are affected by that. So I don't know if they're going to mark the cost of sale part of it because we don't know if this is perpetual or periodic. Okay, so let's put it in case. Okay, so we'll put the most important one, which is the bank and the sales. That's probably what they're going to look at here because it's the sales of goods for cash. But then underneath this, we can say that if this is assumed to be perpetual, we would have cost of sales and inventory. Okay, so there's no like we've covered everything. Okay, all right. So let's put that.
So a bank.
What is happening to it?
It's increasing.
Good. Where would you put that then?
Debit.
Nice. Okay, so debit, bank, bracket, asset increase. And?
Credit sales.
Very good. Credit sales, bracket, income increase. Right, and now you've got the working. Now we just need the amounts. Okay, so what are the amounts here? 875, 875, 875. Right, then I would just again obviously mention, so asterisk, yeah, asterisk at the bottom. You can just say asterisk assuming perpetual inventory management system.
How do you spell perpetual? Sorry.
Okay, I'll show you. Perpetual, P-E-R-P-E-T-U-A-L, perpetual. Okay, so assuming a perpetual inventory management system, then you would have 2 extra debits and credits. Okay, here they're only looking at the sale, so the first part is probably what they're looking for. But remember, if I've got periodic, do I calculate cost of sales? No. If I've got perpetual, do I? Yes, I do. Okay, so the only time you'll have 4 transactions or 4 accounts being affected would be when you have perpetual. Okay, that's the only reason why I'm revising this concept and just adding it here. Okay, so you can say asterisk, assuming perpetual. What would I then have? I would have debit, cost of sales, because every sale has a cost of sale. That's an expense that's increasing. And I'll credit the inventory. Inventory, brackets, asset, decrease. Right, so all transactions will have 4 workings for a sale if I'm looking at the...
And cost of sales, what element would that be?
It's an expense, E. Yeah, so the sale is the income, so the cost of the sale must be an expense. Right, and then you would obviously include the amount, but we don't know what the amount is, so don't put anything. We're just adding that additional note, okay? Because there's no gross profit here or percentage or anything like that, markup on cost and that. All right, so that's fine. So at least then we've added that level of detail. Okay. All right. I don't think we need to mention it again in number 3 because it's just looking at a sale, but now on credit, not cash. Okay, so the same thing would apply cost of sales at inventory, but for debtors. Okay, but yeah, there's no cost, there's no gross profit, there's no markup, so we don't have to worry about that. This is the 3rd as well. Okay, so copy paste 3rd September. All right, what are we debiting? What are we crediting?
So sold goods on credit. So debtors control increase.
Yeah, so they use the word trade receivables. They've spoken about a debtor, but I think they'll prefer trade receivables. So debit, trade receivables, try write a bit smaller so you can fit both in. Trade receivables / debtors. Trade receivables / debtors. Okay, what is that? Asset increase. Alright, that will be your thought process. Remember, those brackets aren't really what they're going to be looking for. Okay, we've been putting that in because that's the correct approach. Okay, that's applying the basics. Right, so the bracket is basically your thinking. Okay.
And then credit sales.
Definitely, same as above.
Income increase.
Yes. Amount 2119. 2119. And there's another transaction. Okay, so what you're doing here is analysis and interpretation, basically. Okay, number 4 for September.
Okay, number 4.
Sorry, it's not too far, yeah.
Paid motor vehicle repairs by check.
Okay, thoughts?
Okay, so instruction. Debit and credit. So paid motor vehicles repairs by check. Repairs.
Yeah, that's very important, eh?
Yeah.
So you're paying for the repairs, not the motor vehicle. Does it make sense?
Yeah. So say motor vehicle repairs.
Which is what?
Debit. That's an expense.
Very good. Okay, nice. All right. So motor vehicles, repairs, brackets, expense increase. What is the amount? 814. Looks like it's 814. Do you have a ruler there? Just check that I am reading the right line. I hope it's a bit difficult reading it backwards, but just yeah, okay, good. Just to make sure we got the right figure. Credit the. How did you pay?
Bank.
By check. So checks affect the bank. So you would debit the motor vehicles, repairs, and credit the bank. Asset decrease. Okay, because the bank is not going up, it's going down. Right, you're making a payment from the bank account. Okay, so you're decreasing the one account and you're increasing the other. Right, now what? 5.
Purchased goods for resale by check. So purchased goods, inventory is going to increase.
Definitely. So debit inventory. Debit inventory. Asset increase. Credit what?
Bank.
Definitely. Okay, bank is being negatively affected because you're using cash to purchase the inventory that you're going to be selling. So it'll be bank, asset decrease, credit. Yes. Good. Don't forget to put the amounts in. There you are. 8295. Perfect. Okay. Alright, after 5, we've got another 5.
Paid a check for drawings.
Yeah, paid a check for drawings. Thoughts?
Debit drawings. drawings.
Good. D for debit, D for drawings. That's the easy one. Drawings will always be debited. That's a no-brainer. That you don't have to worry about.
Oh, yeah, we don't have to.
Yeah. Okay. Drawings is drawings. Okay. Drawings is part of owner's equity. Drawings will obviously affect the accounting equation, but we're just looking at the accounts being affected.
So then we would credit bank.
Yes. Okay. We paid a check. So the owner took cash or money from the business, so their bank account is going to decrease. The business's bank account. Okay, amounts 450. Alright, and the last one? The last one says
Purchase a new motor van by check.
Okay, are we selling motor vans?
No.
No, so that's a very, very, very big important note to make. We're selling computers. Right, so if they say we purchased a computer, that could be inventory, possibly. Okay, we're not going to be selling this, we're going to be using this, so
so it's an asset.
Yes.
Number 6.
Yeah, 6 September. The last one here for this exercise. Debit what, credit what?
So we're going to debit vehicles?
Yes, definitely. Okay, I would use the words in the question because we don't know if they're going to accept vehicles. So say vehicles, 2 dots, motor van. Okay, so at least you've identified it because you've used the words from the question. Okay, vehicles, bracket, or vehicles, motor van, and then in brackets just asset increase, just A increase or A arrow up. Just so you know the working. And
then credit.
it's not 450, eh?
No, sorry.
Yeah, it's the last one, 3,000, 3300, 3300. Yeah, and what are we going to credit?
Credit bank.
Definitely, okay, because you're using a check. Right, so that's the first question, hey? Question 1. Let's label these. So question 1. Alright, so that's very good. Your analysis is really, really, really good. It's on point. The only thing is obviously just wording. So just be careful. Try use what they've given you here, and try stick to the language that's given here. Okay, so I would talk about like trade receivables, trade payables. There's nothing wrong with writing down both. So trade receivables / debtors. That's fine. It's perfectly acceptable. That's just being more thorough. So I would just mention that every time, just so we've got that. Okay. All right. So that's a good start. What does question 2 want?
Hey, question 2. Desires business opened on the 1st of January 2015. The business had the following assets and liabilities at that date.
Okay, so they've given you assets, liabilities. Good exam technique would be to identify what they give you. So what do you have?
Shop fittings.
What is that?
Assets.
Good.
Asset. Cash at the bank. Asset.
Good.
Cash in hand. Asset. Bank liability.
Perfect.
Calculate Azai's capital on the first using the accounting equation.
Okay, so accounting equation is what? Let's write down the formula. Right, so accounting equation as a heading. Let's specify what that is. What is it? TION equation.
Oh, sorry. TION.
Yeah, TION.
Assets equals owner's equity plus liabilities.
Yes, perfect. So write that down. Assets equals owner's equity plus liabilities. Alright, so just to revise, okay, as we're going through these exercises, obviously owner's equity is very special because owner's equity is 4. Okay, owner's equity is owner's equity is?
Yeah.
What is owner's equity? Capital, drawings, and income and expenses, profit or loss. Okay. All right. So when looking at the accounting equation, we need to always identify the different components because there are only 6. Right. So assets and liabilities are their own.
Yeah.
Okay. Owner's equity is 4. Okay. All right. So what are they asking you to work out here?
Capital.
Good. So which is basically the owner's equity.
Yeah.
Does that make sense?
So assets.
Put in the assets. So let's write them down. So what were the assets?
18,000. So
Good. Shop fitting. So 18,000.
So, must I just put the amounts?
Yes, I think the amounts are fine. I don't think you'd have to. It's 2 marks. So see, the nice thing about this is they actually tell you how much marks you're getting for each question.
Yeah.
Okay, so we know this is 2. So if it's 2, I doubt they're going to ask about, like, you don't have to write down the word specifically, but that would be a bit too much. Okay, so 18,000 plus 3,400 plus 900 equals, we need to write down the word owner's equity. Owner's equity plus liabilities, which were 4,000. Okay, so then I'm going to solve for owner's equity. Okay, if I solve for owner's equity, I'm going to get 1,800 plus 3,400 plus 900 gives me 22,300.
22,300.
22,300. That should be the same as what you got. Yes. Okay, less 4,000 because you're taking things to the one side. Okay, so 22,300 minus 4,000 gives you 18,300. Yeah, that's good. You can show all the steps and then just take the 8, not the 8, the 4 across. Perfect. Equals owner's equity. Yeah, so just some maths, basic equations.
What did you get as your answer for this?
18,300. Yeah, so 22,3 minus 4 gives you 18,3. Alright, and just conclude. The capital is, or the capital would be, the capital is 18,300. Yes, then we've answered it and we've given a note about the answer as well. Okay. Alright, that's great. That's another one.
The following transactions occurred. Okay, so this is that part of question 2. The following transactions occurred during January 2015. So we go with these. Record all the information in a suitable ledger account.
Okay, so now they want us to record the information in a ledger account. So you're going to need to draw up tier accounts. Okay, because it's the recording. Okay, so see, B says record all the information in suitable ledger accounts. Okay, so a ledger account is a tier account, so we need to draw them up. So the first one is obviously what? Shop fittings, cash in hand, bank.
Oh no, but they're talking about question B. The following transactions occurred during 2015.
Yeah, so those are the transactions that relate to the business. So question 2 is 2 parts. Okay, question 2 starts with balances and then they give you the transactions. Okay, so I would also look at creating those tier accounts. Okay, because like for example, January 2 said purchase goods for resale and paid in cash. So that's going to affect what? The cash.
Yeah.
Okay. Alright, so let's draw that up. Let's draw up these 4 accounts. So you're going to have to leave lines. So draw up one account, put the balance, leave lines. Draw up another account, put the balance, leave lines. Draw up another account, put balance, leave lines, and then we'll go to the transactions. Okay, so okay, so I need to label this. This was A. Okay, B. Alright, so we need tier accounts for all of these things. So let's draw up left and right hand sides. Okay. Leave about 4 or 5 lines. That should be enough to do balancing and recording.
I'm just going to need 5. So that
yeah, more space is good. And then we can obviously look at all of them. Okay, so the first one would be what they've given you in the question, shop fittings. Shop fittings. Okay, yeah, because question 2 is a two-part question. So obviously the balances would be applicable to the question in terms of transactions that take place afterwards. Right, so the shop fittings, 18,000. What type of account is shop fittings?
It's an asset.
So where would you put the balance?
Debit.
Good. Okay, so what month do we have here? Opened on 1st of January 2015. Okay, so 1/1/15 balance brought down 18,000 for shop fittings. Okay, like that. Okay, yeah, perfect. You know how to do it. That's great. And then
Cash at the bank.
yes, okay, so your other account will be cash at the bank.
Would you name it like that? Or?
Yeah, I would keep the naming the same as the question, okay, because in this particular business, they're using these account names, okay, because these are the accounts they're actually starting with. Right, so cash in the bank is 3,400.
Yes, also assets will also be the same.
Yeah, it's also an asset that will still be on that side. Yeah, so we're just putting in those opening balances because it's a two-part question, so you would have to use the information from above. Okay, because here we're looking at the actual transactions, the posting of them.
Okay, next one.
Yeah, cash in hand. Okay, so now we need to put that in. Cash in hand is kind of like petty cash if you think about it.
Yeah.
Okay, cash, physical cash. Right, how much physical cash? 900. And then the last one that was given in the question was obviously bank loan. Right, so once we've got these, then we can start looking at the transactions. Okay, bank loan, balance will go on the credit side. And then we can look at them just now. Okay, the workings.
Cash in hand is also assets.
Yeah, the cash is on hand, or at hand.
Okay.
Right, that's perfect. So now you've got all the accounts. Now we just need to read each transaction. And we need to either post to these accounts or create others. Alright, so what is number 1 asking you to do?
So number 1 says on the 2nd of January, purchased goods for resale and paid in cash. So purchased goods, so inventory, and paid in cash. So cash in hand.
Would you use cash in hand or would you use cash in the bank? What would you use?
Cash at the bank.
Yeah, I would also think so. So I would think that if you're buying goods, okay, you would use, unless the amount was very small.
I'm going to do this in pencil so I can write it.
Yeah, unless the amount was very small, we would then use because there's 2 different forms of cash.
Petty.
Okay, yeah, so cash in hand is kind of like petty cash, and cash at the bank is, well, cash at the bank. Alright, so obviously if we're looking at recording the purchase of goods for resale, okay, the problem is like they just said paid in cash. They didn't say paid in cash at hand or paid in cash on the bank. That's the only problem with that. So I would just circle cash and just put a little question mark next to that, because is it cash in hand or is it cash at the bank? We don't really know. Okay, so which one do you want to use?
At the bank.
Yeah, I would also use cash at the bank because that's the cash that you're actually using for like more bigger purchases. Right, so where would you put this? Debit or credits?
Credit to the bank.
Yes, you would credit the cash in the bank because the bank's cash is going up or down.
Yeah. So can I just say 2/1?
Yes, because this was for the second. Yeah.
But
so,
do I have to say /15?
I don't think you have to, but I'm going to because I can fit it in. You can leave it as 2/15, it's fine. And then, what are you going to put? What did you buy?
Inventory.
Good. Okay, so you're referencing the Contra Accounts. Which journal would this have come from?
Journal, CBJ.
Yeah, well, cash payments is correct, but remember, they don't use the cash payments, they use a cash book. So you would say cash book payments, CBP, or cash payments book, either or, doesn't matter. CBP is probably right, because that's what I remember them referring it to. Okay, that's it.
I don't remember that CBP. think I remember that.
Yeah, because remember we did cash receipts and cash payments because they were separate. But then remember they group both receipts and payments into one cash book.
Okay.
Maybe let's see if I can find an example. I'll show you.
No, it's okay. I don't know. I don't remember that. Okay.
Yeah, because they group it into one. It's a journal basically, but it's a journal that covers two things: payments and receipts. Okay, so there, cash book, page 24. Yeah, so if you look at this, see their cash book is looking at a T account where the cash book is recording the receipts and payments. That's all. Okay, so here I received money from sales, here I paid money for wages. Alright, so it's just their way of representing it. Okay, it's just the textbook's way of doing it. Alright, so obviously we're drawing up T accounts because they said record the information in the suitable ledger account. So
Can I put that as a revision thing? Shop fittings was an asset. Cash at the bank was an asset. This is an asset. Simple liability.
yeah, how much did you use? 800 for the first one. Right, does that make sense?
Yeah.
Okay, then obviously we're creating inventory. Good, so you already started with that. That's great. Okay, so I'm going to put that there and I'm going to reference it, obviously. Cash book payments.
So now would I reference it as cash at bank or?
Yeah, cash at bank. It's referenced with the Contra account. Good. So whichever one you used, cash at bank was what we went with. And then the 800. Right, so every debit has a credit. So there's the debit. And then your other account had the credits. Alright, so that covers two.
Paid rent on business premises by check for month.
Okay, that definitely would have come out of the bank.
Yeah, paid rent for business on premises by check for month. So cash at bank, yeah. Okay. So the credits.
Okay, so let me just see what else, how else do they describe this? Okay, then they say cash sales by check, paid assistant wages in cash. Okay. Yeah, I'm just checking the vocabulary just to see maybe they differentiate between cash at the bank and cash in hand. They don't actually. Alright, but this is definitely cash at the bank. Why? By check. Okay, so when you see by check, this is definitely going to come out of cash at the bank. No doubt about it. Okay, but when it's cash, there's a question mark. Alright, because is this cash at the bank or is it cash? So 800, you could have paid this from the cash at hand. Okay, possibly. Alright, but let's record. So cash at bank, definitely on the 4th of the 1st.
So then I just say rent. Rent expense.
Rent? What do you mean rent expense?
Yeah, in details.
Oh, you mean the details? Yeah, you would say rent. It's an expense because you've paid it, yeah. Okay.
CBP as well.
CBP, yes, it's a payment. Okay, so that was cash to bank, so that would be on the side, 4/1/15, rent expense, CBP, and the amount. How much was it? 500. Okay, I'll just double check the amounts just so we're reading the right lines. Okay, what's next?
So should I draw up your rent expense?
Definitely. Okay, good.
Just rent or rent expense?
Rent expense. Okay, specify what type of account it is. Okay, because rent expense or rent paid or received, it's two different things. Alright, so this would be rent expense is an expense, and then this would have been on the 4th, cash at bank, CBP, and the 500. Right, so every debit has a credit.
Okay. whatever. So purchase goods on credit. So purchase goods, so inventory.
Okay, so we've already got inventory.
Yeah, inventory is going to increase.
It will increase.
Debit, so
it will be debited because of.
Put the name. So
yeah. So you can write the name, but first write down what it is. So write down trade receivables, 2 dots. Trade receivables / debtors, 2 dots. Tres. Okay, so let's put that in. So with inventory, this was what day? Day 6. 6/1/15. Trade receivables / debtors, tres. How much? 5/8. Okay, so that's the one account. Where else are we going to put that?
So you're going to draw the account for tres.
Exactly. Okay, good. So you're going to debit or credit treasurer's account. Purchase goods. So tres is what? Debtor or creditor? Ooh, creditor. I think I said debtor. That was my mistake. Did you write it in?
Creditor.
You wrote creditor. We should have said trade payable in. Okay, so just change your receipt to payable. Okay, purchase goods on credit from. Yeah, purchase goods. So if I'm purchasing, it's a payable. Sorry, I said the wrong thing. Okay, so trade payables, creditors, tres. Right, because now see I'm checking myself because I obviously debtors will be debited, right? But I can't debit debtors if I've debited inventory. That would be wrong. Okay, so I need to drop a liability called trade payables / creditors brackets tres and the amount. This took place on the 6th. I'm going to reference inventory. This would have, what book would have this have come to or going into?
CJ.
It would have been, the creditors journal. Let's just see, do they talk about those creditors debtors journal at the beginning? I think that comes up later. Yeah, that comes up later actually. Control systems, ledger, control accounts, chapter 13. In terms of the cash book, we've covered cash books. We haven't looked at credit journals. So we'd have to think of previous work, so from last year, creditors journal. Okay, so I'm going to call that the CJ, the creditors journal, and so we've got a reference for it. I don't think they'll mark the folio numbers like CJ or CBP, but it's always good just to be thorough. Okay, right, how much was it? 5/8. Okay, so 5/8 on this side, 5/8 on that side as well. Right, so every debit has a credit, another one completes. Okay, easy one now.
So I also did account for this, not credited.
You have to credit the trade payables, yes, because it's liability increasing.
Okay, cash sales, okay, easy. So that would be sales. Okay, so bank, cash at the bank would increase.
It would.
Because of sales.
Yes.
So on the debit side.
Yes.
Keep the 9.
Cash book receipts.
So I'm using CBP now.
CBR because it's a receipt, not a payment.
But how can we use payments? Okay. How much was it?
Yeah, what was it? 17. Okay. Alright, so once we've done that, then what we record the contra. Alright, so that's good.
For sales.
Yes, okay, so what is sales and income? So it'll have what balance?
Credit.
Perfect, okay, so put a heading for that one. Sales, this was on the 9th. And this was for cash at the bank. Cash at bank. Cash book receipts, CBR. And amount, same amount as before, 17.
So it's going to be credited?
It would be, it's an income.
Cash at the bank. CC. This is the name. Do you think if I just put like the month, it would be fine? Or?
Well, you should put at least the month, so you can leave out the year, the 15 year. That's not that.
Because I'm going to retype it, but.
I don't think you have to. You can just scan this in. It's actually better because they can see. Oh, it's your own writing.
Okay.
Yeah, there's no need to type this again. I mean, if you really want to type, I'll give you this, but you don't actually need to. I think it's fine just to literally scan this and send it, because I think that's how you did your accounting last year anyway. You also wrote it. You didn't do it on computer.
You need to write accounting.
It's much better to write accounting. Yeah. Okay. Right, next.
Oh yeah, remember we also did it all in pencil.
Possibly. I don't know if it was pen or pencil, but I remember doing it this way as well. Okay.
Okay, cash sales.
Yeah, that one's complete.
Desire arranged an additional loan from the bank.
Okay, good.
So, bank loan.
Bank loan, yes, good.
Increase.
It will, what date? 12. 12/1. That's fine. If you just want to put 12/1 is okay. What is it? It's referencing what?
Bank.
Cash at the bank. Okay, because think about it. If you get an additional loan, the bank is going to give you more cash. Okay, so cash at bank. Which journal? Are you receiving or paying?
Receiving.
Yes, CR or CBR, cash book receipts. And this would have been an amount of how much? 2,000. Right, now we go to cash at bank. Debit side, why? Because the cash is going to go up. On the 12th of the 1st, what is this? Bank loan, cash book receipts, 2,000. And that's it. Simple, nice, easy. Okay, we don't have to draw more columns or more tier counts. We've got them.
Withdrew cash for private use. So bank could be credited.
Definitely. Cash at bank. See, here they said you withdrew cash. So that obviously means you've used the bank.
So,
well, drawings, yes, obviously.
So
would
we reference drawings?
Yes, of course. You have to. Debit or credit? Credit. Right, so this was what date? The 14th.
Yeah.
14th of the 1st. Drawings would have been a payment, yes. Okay, so this would have been drawings, CBP, because we're just paying the owner. How much did he draw? I would use 700. Right, then we do need a T account, a different one, drawings. So let's drop a little T, heading drawings on the 12th, no, the 14th. Cash at bank, 700. Sorry. Okay. Perfect. Debit, cash at bank for drawings, CVP, perfect. Right, now I'm complete.
Sold goods on credit to.
Yes, so here's the debtor one.
Okay.
Right, because we're selling.
So let's just do sold goods first. So sold goods on credit, sales.
Very good.
Increase.
Sales will increase. Yeah, you've got sales, so you would debit or credit?
Credit 19. Good,
19.1.
Trade receivables.
Yes, very good. Okay, trade receivables / debtors, and then the name. Who is this? HLK. Okay. Debtors journal. DJ. Okay, because it's a debtor or sales, depending on whether it's a sale. What is the number? Okay, I think it's 49. Just double check. There's a. Yeah. Okay, great. 49. Right. So once we've done that, then we need to show the contra accounts. All right. So do we have an account for a debtor HLK? No. So we need to create one. All right. So you draw up a little column.
So even if we had another trade payable, like another creditor, would we do a separate one because it's a different creditor?
Yeah. Different creditors have different accounts. Yeah. Unless
they're only grouped in the general journal. No. Where are they grouped? Yeah. In the trial balance.
The trial balance, they can still be put separately, but you can group them into one account. Okay. But then you'd have to identify all of them. So you get a debtor's journal and a creditor's journal, and you get a debtor's ledger and a creditor's ledger. Okay, so in the ledger you would identify them separately. Yeah, okay. Here we're just showing them separately. Alright, so what are we doing here? Oh, trade payables, receivables actually. HLK, that's the heading. Okay, so your account would be trade receivables / debtors HLK to identify them. This was day 19. This would have gone up because of sales. Debtors journal 4,900. Okay, debit side is correct. 19th is correct. Reference the contra account, which is sales, debtors journal, and the same amount. Nice. Next.
Purchase new shop fittings and pay by check. So yeah, we have shop fittings.
Pay by check. Shop fittings we've got. Yes, so we can go back. Shop fittings, debit or credits?
Debits.
Good. This was for the 23rd. Okay. This is going to go up. Cash at bank. C. Which journal?
What is it? CBP.
Yes, cash book payments, because it was paid by check. How much? 1,700. Alright, perfect. So shop fittings, and you've got cash at bank, eh?
Yeah.
So we're going to have to put that in on the debit or credit side?
Credit.
Credit side, because it's decreasing. Good. Okay, so 23/1, shop fittings, cash payments or CBP, cash book payments, and how much? 1,700. Yeah, same amount. Sorry.
Okay.
Perfect. Another one complete.
Paid trace limited by check. So
good.
Trace was trace.
Paid trace. So trace was a liability.
5,800. So we're going to debit his account with 5,800.
Good. Did you pay them the full amount? No, you didn't pay the full amount.
Just said paid trace by.
Yeah, how much did you pay? Check them out.
Oh.
Yeah. How much did you pay? 2,900. Okay, so 2,900 was paid, and this came out of the bank. All right, so day 25. 25/1.
CBP or?
It would be a payment, yes, because it's affecting the bank. All right, so cash at bank, CBP. 2,900. Is that okay?
Yeah.
Okay, great.
So cash at bank would also be credited?
It would be credited because it would decrease. 25.
So trade payable.
CBP.
2,900.
Yes. Okay, that was the credit side, eh?
Yeah.
Good.
Paid assistance wages in cash. See there, at least they're saying cash. So cash at bank. Okay, so it would be wages. CBP of.
Looks like 1,000.
Yeah. And this was on the 26th.
Okay, do we have an account for wages? No, so we have to draw it up. Yeah, 26 of the first, cash at bank, 1,000. Okay, you're referencing your credits. Right, because that's the debit. Good. Last one, 29.
Received check from HLK in full settlement of account due.
Okay, so this HLK debtor, which is there, what did they do?
Full amounts.
They paid us. So this is a receipt or a payment?
Receipt.
It's a receipt. Yeah, so his account will go up or down?
Down.
Down. And this happened on the 29th. So 29.
So can we reference as CBP?
CBP, no, it's not a payment, it's a receipt.
The DJ stuff.
CBR. Okay.
Oh, sorry, yeah.
Because you're receiving money from a debtor. Okay, so a receipt from a debtor would do what to this account? Decrease the account.
Yeah.
Okay, so this is account that's going to decrease cash at bank. CBR and the amount 4,900, same amount. Why? Because they said that it was a full settlement.
Yeah.
Okay, so
this
there were.
is what received, so we debited.
Yeah, there'd be a debit here.
So would we
29.
just say trade receivables, trade?
Yeah, you'd have to reference it as is from that account. So trade receivables / debtors / HLK cash book receipts 4,900. Okay.
Cool. Done.
All right. Not quite.
Yeah, I'll just have to balance them out.
Yes. Okay. So if I go back, just look at the balancing. This I can just add up.
Yeah.
Okay, but I'm going to show the balancing properly. So what you would do is you'd obviously put totals like this. Okay, I just want to balance these two, and then the rest you can probably balance. Okay, but let me just show you the balancing here, just so you're familiar with it. So I would sum up, okay, the left and the right. Obviously the left is bigger in this case. There is no right. All right, and then obviously I would just carry this down. So on the 31st, what month was this? January. Yeah. So 31/1/15 balance, carry down, and the amount. And then I would say first of the second of the 15 balance brought down, and then I would have the same amounts. Alright, so this one is challenging. This one you might have to redo this account because I see you ran out of space.
Yeah.
Okay, but I'm just going to show the balancing here at the bottom. Okay, so now, do you agree I've got left and right hand side?
Yeah.
Okay, I need to add up both sides. So I'm going to put a total here. Right, then I need to sum up. So sum of the left and the right. Sum up that side. Sum up this side. Which side's bigger?
The side 12.
Yes, the debit side, right?
Mm-hmm.
Okay, so the debit side's bigger. What am I going to do? I'm going to put the same total on both sides. Alright, and then I'll have balance carried down and balance brought down again. And the balance here is going to be this minus the sum of all of those figures. Right, which is 4,400. Okay, so 4,400 is the balance for the next month. So I end this month with that balance, and I open February with that new balance. Does that make sense? Okay, and then you would literally have to do that for all of them. Okay, so I'm just going to quickly do that for the rest. This one you wouldn't have to balance.
Yeah.
Okay, if it's a single account, that I'm going to delete, just leave it as 1. Okay, bank, okay, this I can balance. Right, so that's an easy one. I would just sum up, just use this.
So can I run to the bottom?
Yeah, no problem. Let me just finish off the exercise. Okay, I'm just balancing all of these. Okay, so you can actually see that I've balanced all these accounts. This one didn't have a balance. Why? Because they settled all their outstanding amounts. Alright, so with this particular one, you don't really have to show that. Balance brought down, balance carried down. Okay, we don't show zero balances. Right, so if you wanted to, you could have deleted this and that, and you could have just shown a total of 4,900 for both.
Couldn't we just show a total of 0, 0?
No, you can't. You can't show 0 here and 0 there because there's a debit here and there's a credit there. Right, the debits and credits just happen to be the same. Okay, is that good?
Yeah.
Perfect. All right, so yeah, let's carry on.
Okay. I'm just getting prepared. I'm writing my learners on Saturday.
Oh, congrats! That's good. It's going to be good. Yeah. Well done.
You bought me this.
Yes. That was last year.
Yeah,
Nice. I hope it goes well. Yeah. Learners are the learners should go quite well because it's just rules and things like that. Yeah, ask Chase because he probably went recently. Yeah.
So,
what did he say?
He said it was all multiple choice. It was just tricky the way they worded it. They
Okay.
They'll say you may turn, you have to turn, and then if you choose,
Yeah, bank loan 66.
inventory.
Yeah, inventory was again just adding up and then just balancing off. Rent you don't have to balance. Trade payables you do. 2,900. Which is the difference.
Yeah, rent expense we didn't have to do anything.
Yeah, rent expense, nothing. Trade payables, you had to. The trade payables was just the difference, so 2,900. It's a very long assignment, I must say. Wow, these are a lot longer than last year's. There's a lot more questions in the accounting one. I'm going to give you one to do for homework, question 3. We'll talk about it now. It's short, it's not that long. At least then you've got some practice with the actual answers.
Yeah.
You got that one, hey? 2,900. Balance brought down, balance carried down. Yeah, it would have a credit balance because it's a liability.
So wouldn't this be then the 31st year?
Yeah, it would be the 31st of the first and the 1st of the second. Yeah, so on the last day of the previous month, you would do the totaling, and then you would open the next month with the new balance.
Sales.
Yeah, sales, credit balance. It's basically just the total. 6,600.
Also for sales.
Yeah, I just need to write the figures in. 6600 there, 6600 there. 6600.
Then for trade receivables.
Yeah, it's joint nothing. Trade receivables are the last one you have to balance. Wages also just had one figure, so nothing to balance there. This one actually balances off, so it would actually be just 4,900 here. You don't have to write these things down. I've just put it in purely because of the balancing, right? That you can actually leave out. All you need to do is just total and show the same amount, like that. That's good enough. Okay. Alright, so I want to guide you with the next one, but I want to see if you would be able to do it because it asks things that are very similar. For example, okay, the required says what? Prepare the following accounts.
Yeah, prepare the following accounting records to record these transactions.
Okay, so you're recording those transactions, and there's only 4. Okay, what are those transactions looking at?
Sale invoices. Yes, invoices.
Debtors or creditors?
Creditors, I think. No, debtors, sorry. Debtors.
Why do you say debtors?
Because it's sale invoice.
Good. And who are we giving it to?
Debtors.
We're giving it to a customer, yeah. So they said sale invoice sent to Bartford Ltd for goods. Okay, so if you are the business and you're sending an invoice to a supplier, that's looking at a sale or a purchase.
Sale.
It's a sale. So all of these are going to be credit sales.
Yeah.
Okay, the only thing we need to revise in order for you to do this is a sales journal. Okay, so a sales journal, the journals, we've covered up until 11. Control systems, accruals, closing entries, cash book discounts, ledger. Okay, see, they don't actually cover the specific journal at the beginning. They cover it later on. See, ledger, control accounts in chapter 13. So books of prime entry might have a sale here. Yeah, there's sales journal. Okay, so if we look at that page there,
yeah.
The sales journal. Okay, what are you going to have in the sales journal? Debits or credits? Or columns?
Columns.
Yes. Okay, and columns for what? Okay, you're going to have columns for the difference, debtors.
Oh, the different debtors. Yeah.
Okay, so let's draw that up. So I'm going to help you with the template, and then I'm going to see. So the template you can do in pen. Maybe when you do it in pencil, and we can check it. Okay, so if there is anything, we can just rub it out, and we can fix it. And then obviously you can just submit it as is.
Yeah.
Alright, so let's do the template in pen, and let's discuss that. So I'm trying to revise the theory, and then you can obviously take your knowledge about the transaction and post it. Okay, so heading for this would be sales journal. Okay, they ask for three things here: sales journal, trade receivables in the sales ledger, and then the
accounts.
yes.
For this and sales accounts.
Yeah, so T accounts, 100%. So let's first draw up the journal. So yeah, so heading sales journal. Okay, I'm trying to find a nice picture here, but they don't give you one. Okay, so the only reference that you can use is chapter 2, books of prime entry. Right, they speak about the sales journal on page 11. Okay, they talk about the sales journal as having listed all the different line items. Okay, so they don't actually specifically give you a template. The only one they give you is this little bit over there. Okay, but that doesn't really help.
Yeah.
Okay, but that's all they give you in this chapter. Alright, but what it should look like is it should have columns. Okay, sales journal is fine, you can underline that. Okay, so you're going to need a small column for, okay, let me actually draw this up as well so you can see what I'm doing. Okay, this is question 3. Right, so we're going to need a little column for documents. Okay, then day, then details. Okay, and then we're going to have debtors or trade receivables, okay, sales, right, and cost of sales, possibly. Right, so that's what you're going to draw up in terms of
This is
templates.
chapter 2.
Yeah, but remember chapter 2 didn't give you this. I'm just referring back to content we've covered previously. Okay, if you look at chapter 2, the only example of a sales journal they give you is that. See, and that's not a very good sales journal. Okay, so there is a better layout or format. So for this one, we're going to have to refer maybe to last year's textbook or last year's examples. Right, but we'll see the actual template that they are requiring when they give you back the feedback, okay, the marked answer. But we're going to need to draw that up, okay, those columns. That would be, yes, okay, so you will put in all the transactions. We're just discussing the headings, the totals, okay. Right, so I just want to revise these concepts and then see if you'd be able to process those transactions. Okay, there's only what, four of them. Okay, so it won't take long. Right, that's the first thing that you're going to have to draw up. Sales journal. Obviously the sales journal is for the debtors, okay, the trade receivables. Right, so document, day, details, trade receivables, sales, and cost of sales. Right, that's what you would have in a general sales journal type of book.
Okay.
Right. Okay, then the next thing is trade receivable account in the sales ledger. Okay, so this trade receivables account in the sales ledger, this is actually only covered in detail on page or chapter 13. Okay, look at the ledgers. Here they talk about credit balances in the sales ledger. Okay, debit balances in the purchase ledger. So this you'll cover in detail later on, but I see they're testing it now, which is fine. It's obviously content that we've covered before. Right, so what is a trade receivable account? It's an asset.
Yeah.
Okay, and it would be a debit, do you agree? Because it's a debtor, it's an asset, yes. Right, in the sales ledger. So the sales ledger is going to be not a general ledger, it's a sales ledger. Okay, general ledger has everything. Sales ledgers have specific accounts. So how many accounts are you going to have here?
4.
No.
No, 1.
No.
2, sorry.
2. Why? You've got
2 different.
Bartford and you've got Williams. Right, you've got 2 different debtors. Okay, so let's draw that up. So your answer is going to look like this. Sales ledger. Okay, then you're going to have 2 T accounts, so we can take this actually. Trade receivables or debtors, perfect. And we can put that here. Right, how many are you going to have? You're going to have 2. Right, so, undo. Okay, that's fine, I didn't move it. Okay, you're going to have that. You're going to have trade receivable / debtor. Who's the first one? Bartford. And who's the second one? Williams. Alright, so draw that up for yourself. So you've got that, and that's the other part of the answer. Okay, so your solution that you'll draw up, in the sales ledger, okay, we're going to have 2 separate debtors. Okay, we've got Bartford and Williams. They purchased from us twice. So you're going to have to process 2 transactions in that particular T account. Okay, so that you can try and see how it goes. We'll discuss and mark next time. Right, but I'm just trying to give you the structure so at least you know what to do. Okay. Right, then we've still got one more part, which is the sales account in the general ledger. Alright, maybe just give headings to those things, and then we can look at the last thing. And that's for Williams.
So would this be their balances or?
No, this would be their accounts, their specific accounts. In what? The sales ledger.
So
okay, so yeah, it would be specific accounts. Right, so remember, the journal is here. Okay, journals record the transactions. Alright? Trade receivables would summarize the transactions. Okay, it would take each person's transaction separately here. Okay, right, and then the last thing, notice it's just for 1 mark. Okay, so why is the sales account in the general ledger only carrying 1 mark? It's because you've done the sales journal.
Yeah.
Right, so obviously if I've done the sales journal, I'll have a total.
Yeah.
So the total is what I put to the sales account. Okay, so this account will be very short. It won't be long at all, but you still need to draw it up. T account for sales. Right, and this is obviously from the general journal. Not general journal, general ledger. Alright, like that. Okay, so then you'll have 1 more T account, and you'll have a T account just for the sales. And that'll be short, it's 1 mark. Just take the totals. Okay. See, we still have time, so I think let's look at 4 as well. What does 4 look at? Let me just have a look. Okay, maybe I'm going to give you 2. Is that alright? Can I give you 2 for homework? Question 3 and 4.
On Friday, tomorrow, actually, we're going to the embassy for Australia to answer questions or whatnot. So I won't be able to make my lesson on Friday.
Tomorrow?
Tomorrow, yeah.
Oh, you can't make tomorrow?
Yeah, I can't.
Oh, okay, so maybe then.
So then today would basically be our last day.
Okay, so then maybe, would you be able to try finish the assignment? Try to do as much of it as you can for when we start classes again. Do you have an idea of when we're going to start again? Or you'll let me know?
Yeah, I'll let you know.
Alright, perfect. Okay, so...
we come back from Australia on the 15th of July.
15th of July.
Yeah.
So, but I mean, your schools are probably closed though, because I don't know when your brother's going back. So just find out and just let me know, and then we can just arrange the next one. Okay, but so I think let's do that then. Try if you can to finish as much of it as you can. I'm going to talk to each of these questions then, just to guide you. Right. So that's question 3. Right. You'll obviously have an answer for that. Okay, which is what we've created. Question 4, let's start with the template. Okay, so what is 4 asking you for? Required. I need to find the template here.
Prepare the business's 3-column cash book for November 2014.
Yes. Okay, so cash book, page 24. Right, remember they use a 3-column cash book, meaning you've got there the receipts and the payments all in one. Let's find one that has both. Okay, that one has both. That's a good one. Maybe this one's better. Okay, yeah, that one's also good. Alright, let's use that one as an example. Balance in the cash book. Alright, so they said prepare the business's
3-column cash book for November 2014.
Yes.
Total the discount column on the state.
Yes.
Post the totals of the discount column to the discount account in the general ledger. Prepare the customer and suppliers accounts recording the opening balance and the transactions in November 2014. Post the cash sales to the relevant accounts in the general ledger.
So see, T accounts and journals. But when they say journals, they're referring to this. Alright, so the cash book would be, okay, if we follow their format in terms of this, because they said prepare the business's 3 columns cash book for November. Right, total the discount columns on this date. Right, so we're going to add the discounts as well in the actual books. Okay, so cash books. Let's draw that up. Okay, you're going to need quite a few columns here.
What's this one?
The one at the bottom, but you're going to have to add an extra column. Okay, so I'm going to draw it here just to show you. It'll be quite a big one. Let's use that. That should be enough space. Maybe that's a bit more. Okay. Right, so that's the cash book. It's a big T account basically. That's the format that they're using in this particular textbook. Okay. Right, so cash book is the heading. Right, so in a cash book, because they're using this format, you're going to have debits and you're going to have credits. What are your debits going to represent in the cash book?
The receipts.
100%. Okay, so on this side of the cash book, I'm going to highlight this in green. That's the receipts. And then this side would be the payments. Right, so column-wise, date. Particulars, you can write the word details, or particulars. If you want to use the same word as them, that's also fine. I'm just using details, date, details. Then folio. Okay, folio is obviously the like CBR or CBP. Okay, I'm not going to draw a specific column for that because we'll just write down the details and then write down the folio next to it. Okay, and then we've got cash bank. So we need 2 columns. I'm going to need more columns then. This is a bit bigger. Okay, let's add more. Okay, and then 3 columns for this one as well. It's quite a big T account then. Okay, so one column for cash, one for bank, and don't forget one for discounts.
Oh. Where?
Because it's 3 columns, yeah.
So
cash, bank,
discount
there, yeah.
Discount.
Wrap out date, make that discount, and then add discount at the end.
Okay.
But
we're not going to have date.
you're going to need a small little column then. Can you put a small little column?
Discount?
Yeah, you can just write discounts. And then just put a little column for the dates.
This one, two.
Okay, what discount will you have with the receipts? Discount received or discount allowed?
Discount allowed.
Very good. Okay, because remember, debtors are going to pay. And if debtors pay, you could give them a discount. Alright, so on the left hand side, you're going to have a discount allowed column for it. Because you may give them a discount. Right, then in the cash book on the right hand side, on the credit side, you're going to have the same columns, 3 of them, one for cash, one for bank, and one for discount received, the opposite. Right, kind of like that, if that makes sense. If you like what you've done, that's perfect. Alright, so that's the first part. Then they say we must total, so that's fine. Post the totals of the discount columns to the discount accounts in the general ledger. Okay, so then you need a general ledger. Okay, we're going to need
discounts allowed and discounts received.
100%. Okay, so we need two T accounts. Copy paste that. One is called discount allowed. One will be discount received. Okay, because that's what the question's asking us to do. Alright, let's carry on reading it. Okay, so they said, prepare the 3-column cash book, fine. Total the discount columns, fine. Post the totals of the discount columns to the discount account in the general ledger, that we've got now. Okay, then they say, prepare the customer and supplier accounts, recording the opening balances and transactions in November. Alright, so that means we need accounts for each of the debtors and creditors, okay, that we can see from the question. Okay, so we need 4 actually. Alright, okay, you've done those 2, perfect. Yeah. Okay, so then we need 2 for these people. 2 payables, 2 receivables. Alright, so 2 payables, 2 receivables. Okay, so trade receivables, I'm going to start with them. Receivables, who do we have? Trade receivables, we've got Frey and we've got Watson. Okay, so one will be for Frey and one will be for Watson. Right, so draw 2 big T accounts, one for Frey, one for Watson. Trade receivables, so receivables.
Would this just be totals?
Yeah, those are fine.
Yeah, but I'm just saying, would they be totals?
It'll be a posting, so you'll have a debit or a credit depending. Okay, but you would be taking the totals from your cash book. Right, yeah, that's fine. So you would take the totals. Take the totals from the cash book. Yeah. Just try it. Don't worry if you don't get it entirely correct. We can always fix and correct later on. Okay. I'm just guiding you in terms of the answer. So the answer would have these categories, okay, these T accounts or ledger or whatever. Okay. Yeah, so trade receivables, one for Frey, one for Watson.
Okay.
And then we need trade payables, okay, because they said prepare the customer and supplier accounts, recording the opening balances and the transactions for November. Post the cash sales to the relevant account in the general ledger. Okay, so then copy this. Right, change this to payables. Payables, creditors.
2 accounts or 1?
2, yeah, because there's 2 in the question, see?
Yeah.
Davis and Ryan. Davis and Ryan. Yeah, I would write in the full name, so like T.M. Davis, Ryan and Co. V.K. Watson, just to be more specific, okay, but we're just using the surnames. Right, so we've got trade payables or creditors, Ryan and Davis. Perfect. Okay, we need 2. And then the last thing that the question asks for 16 marks is the long question. Post the cash sales to the relevant account in the general ledger. Okay, then we will need bank. Cash sales. Sales and bank, actually. Okay, those 2. Davis and Watson. Watson was the receivable. Davis and Ryan. Those 2.
Okay.
Right, and then the last thing is, they said, post the cash sales to the relevant account in the general ledger. So then you would need 2 more accounts, 1 for sales and 1 for bank. Did they give you bank? Oh, they gave you cash at bank, so use this. Yeah, T accounts. I would actually want to do 3 accounts. Do 1 more as well, because I see they've got cash on hand and cash on bank again. Right, so you will need cash at bank. Right, cash in hand, that was the other one. Okay, they tend to split it, which is fine, we can. And then the other one would be sales, and that's the last of it. Okay, so then 3 more accounts. Obviously these will just have totals, but you'll still need to post them. Okay, yeah, you'd have to take those transactions.
And then the last one was sales.
Yeah, cash at bank, cash in hand, and sales. Right, there are some easy marks, obviously opening balances that you can probably get right. Okay, right, so I'm going to ask you to try do those 2. See how they go. Those are things that we've covered already. We've looked at journals, we've looked at ledger. Just 2 questions to try, and then when we get back and when we start again, we'll carry on with this. I'll do 5, 6, and 7 with you. Okay, just to revise and cover new work. Okay, this might be a little bit different, but we'll discuss it. Okay. All right. Perfect.